Welcome, everyone. My name is Kevin Hurley with Hurley Investments, and I'm going to present to you today how to make money both ways using options. For those of you who may be a little bit new to options, an option is a derivative that derives its value and purpose from the stock that's associated with. Could also be an index, but plain and simple, this is options, all four option instruments put together in one sentence. An option is a contract that gives a purchaser or seller the right or obligation to sell or buy the underlying stock at a predetermined stock price for a predetermined period of time. That's the complete overview of all four option instruments. If you're buying an option, it's a right. You have the right to buy or sell a stock. You will pay for that. It's a debit trade. If you're selling an option, you're obligated to have to buy or sell a stock in the future. It's a credit trade. You've taken someone's money and you're now obligated to do something. Although options are often used with stock ownership, it can be purchased without it. One option contract will cover 100 shares of stock. So an option is a derivative that has leveraging opportunity or potential for it. And last but not least, options have the ability to make money in both bullish and bearish movements on a stock. Options are what change the probabilities from a 1 out of 3 chance owning stock, if it goes up you make money, to a 2 out of 3 chance, or a 66% chance to make money. Long calls and short puts are bullish moving options that make money when stocks go bullish. Long puts and short calls make money in bearish moving markets. The trend is your friend, and the opportunity is pick which option will follow the correct trend. I'm going to show you an example of Bank of America. It's roughly a 30-day trade. Pretty neat that you can make money as the stock goes up and down. And the best thing about it is to own 100 shares of stock, you would have needed roughly $30,000 to make an 18-cent gain per share. That would have been like a 0.6% return, and you would have suffered a 10% drop over that period of time. Here's the chart, and here's what I was looking at. My decision-making process was looking at this period of time right here, and knowing that historically, if we had a drop in Bank of America, it happens around that $30 level, or that $30 point in time. This is a typical V-shaped pattern. Most stocks will move like this over a month, a 3-month, even sometimes a year period of time. It is jagged, it's up and down and sideways and down, but in all essence, this is a V pattern shape if you're looking at technical analysis. Now, my first position that I entered was a Bank of America long put. It makes money as the stock goes down. 111 contracts for 95 cents entered on the 18th, which means on this day right here, I chose to say, hey, I believe the stock's going to go down. Pretty awesome, because the next 2 days it did just that, but it still tested the 30-day, and then the bottom fell out, and this sucker fell down all the way to right here. So, decision-making period of time. Here I am spending 95 cents, expecting the stock to go down. I was correct. As the stock went down, I would love to tell you, hey, nailed the bottom. Well, in all honesty, my decision to sell out happened on the 7th, right here. That was my decision. That was my time period to get out of Dodge. What I bought for 95 cents, I sold for $1.74. And as luck would have it, my thought process was, okay, we're probably at a bottom. Yes, for 3 days, it got back up to where I sold out at. So I didn't quite get it. I missed the bottom, but I still made pretty good money. I'm going to calculate that with you a little bit later. But my decision was, what do I do now? What do I do now? It might be at the bottom of this V shape, right? Well, if you look at a chart, historically, when it gets down to that 27.50, we had a bounce. We had a bounce. We had a bounce. We had a huge bounce. We had a bounce. Huge bounce. Bounce, bounce, bounce. I mean, I've got opportunities here where 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I've got 10 bounces. Now, of course, against those 10 bounces, we have a drop, we have a drop, we have a drop. The probabilities were 60-40 that it would go higher. So because I'm using options, not having to buy a $28, $27, $30 stock, I said, let's bounce it to the upside now. This time, pretty neat, purchased 121 long call contracts. Did this on the 8th, right here. And this was my expectation, hey, it's going to bounce higher. Obviously, I couldn't see the chart off to the right. Didn't know what was going to happen, but I was just playing the bounce, just playing the 60-40 probabilities. As luck would have it, off it went. Pretty cool when what you buy for $1.04, you can sell for $2.14 to $1.99. Pretty neat to be able to do that and to close out of this trade just 3 days later at the close of the market here on the 11th. Why didn't I stay on it to go farther up? I could have, but I've got stock ownership, 10,000 or plus shares. I was ready for earnings where things might have changed. The short answer is, saying it in plain simple English, playing the stock down, I spent 95 cents, not $30. I sold to close it for $1.74. I made 79 cents. Pretty good 80% return. To go ahead and risk another dollar, what I bought for 104, sold for 199, another 95 cents of profit over this month-long period of time. I'm just showing you my sheet as I was going in and out of positions. But over this month-long period of time, made $1.74 on roughly $1 of risk, 174% return. Whereas if I had owned the stock by itself, I would have been profitable at 18 cents or 0.6%, but I would have had to have lost just over $3,000 in that process. I would have been down. Doesn't mean I would have lost. It's a paper loss, but I would have been down $3,000 at one point in time. The neat thing is, how does this work? You just need a brokerage account with margin. That can be done in an IRA, Roth, trust accounts, LLCs, individual accounts, joint accounts. Just look at your platform that you would trade on. Follow the trend using the correct option, making sure that you're following the trend with an option that can make you the money in that trend. If you have any questions, you know what? Go ahead and give us a call. You can talk to us outright. I'm always available. Please, if you'd like to see one of these educational videos, go and frequent myhurleyinvestment.com, or if you have a particular question, you can always email us at support@hurleyinvestments.com. Glad to be with you. I hope this is helpful. I look forward to seeing you next time on one of our Hurley Investments short educational videos.